Hi everyone, Brian Griffin again here. Today we're going to talk about our personal financial statements. Kind of what are they? How do you calculate them? Why are they important? What are assets? Warren Buffett has said that accounting is the language of business. And to calculate personal financial statements, you need to just understand a few basic accounting topics like assets, liabilities. The difference between those two are net worth. So what are assets? They're things of value. So things like your house, car, cash, those types of things. What are liabilities? Things that you owe to somebody, like the loan on your house, the loan that on your car or your boat, those types of things. Credit card amounts that you owe. Those are all types of things that are liabilities. So we're gonna go through an example of listing all our assets, subtracting out our liabilities. The difference between those two is your net worth.
All right, so let's go ahead and start reviewing some personal financial statements. I just got some examples up here on what that might look like. So what you have to do is you have to go and you have to grab all your cash accounts, which are basically like your savings account, your checking account, if you have multiple, add them all up, and then that's your total asset for your cash accounts. If you have any CDs listed here, in this case, I'm showing this person has 25,000 in CDs. If you have investment accounts, now these are accounts that are not part of your retirement plan. They're things that you would have just invested in the short term for, let's say, 2 years, 3 years, 5 years, that kind of thing. In this example, I'm showing Charles Schwab for 40,000 and maybe 15,000 at Fidelity. The 401k, now this is your retirement plan. Again, this money, for the most part here, you can't touch that until you're at least 59 and a half. So that's long-term, investment in the retirement type money. Or if you have also a Roth IRA. So in this example, you had $40,000 in 401k, you had a Roth IRA of $6,000, so that's after tax money. You've already paid your taxes, now you're investing that money. And again, you can't touch that until you're 59 and a half. So that's more long-term. List your house value of in this case, it's 260,000. If you have a couple automobiles, you need to list the values of those out. If you have a boat or a motorcycle, if you have any kind of loans to a family member, let's say that you loaned your brother or your sister $1,500, you would show that as an asset because they're going to hopefully pay you back. If you want to, you can list personal assets. A lot of times, it's a little difficult because how do you value some of these things, like your furniture in your house or your computers, your telephone, your watches, things of personal value. You can list those out because if they're paid for, they're an asset of yours, and in theory, you could sell those if you needed to. So these would be a list of all your assets. These things have value to you and or to somebody else. You could convert that CD into cash. You could sell your house for cash. Those types of things. So in this example, this person has $449,500 of assets. Now from that, you have to subtract the liabilities over here related to those assets. There are no liabilities, connected to a CD or anything like that. But for your house, let's say that this person still owes $125,000 on their house. You would list that. Just go to your bank statement your loan statement at the end of every month, and it will tell you how much money you still owe on that house. So you pick that right off of there. Same thing from your automobile. You can get a statement. Hopefully you're getting that monthly, and it will tell you how much you still owe on your car. Same thing if you have a loan on your boat, you would or your motorcycle, you would list that. If you have student loan debt, list that debt as well. In this case, $27,000 is the example. And then if you have credit cards, and you're not paying those balances off at the end of every month, then you need to put down kind of what your average balance is, or your outstanding balance at the end of that month, and that's your liabilities. If there's other things that you owe that I don't have listed here, you would list those. So in this person's case, they have $449,500 of assets. They have $186,000 of liabilities. This person's net worth is the difference between these assets minus these liabilities is their net worth. So this person has $263,500 in net worth. Where would you, when you're trying to calculate your house value, it's pretty easy nowadays. You can go onto Zillow, you can go onto realty.com, Redfin, you can go on to your county website to try to give you an idea of that. But I would say probably Zillow is your best bet for giving you just a quick and easy value. You could even take the average of the two if you don't really trust the value of one or the other. If Zillow said that it was worth $270 and Realtor said it was worth $250, then you take the average of the two, that's your $260,000 of value. Kind of the same thing with your automobile. Kelley Blue Book, basically if you enter in the data of how old your car is, how many miles it has, what kind of shape it's in, those kinds of things, then it will give you a value of what they think that car is worth. I believe Carvana also does that. There's others. You can go on the internet and kind of Google that. So it's pretty easy to kind of get a guesstimate on where you think the value of these assets are. And like I said, you should be able to determine the value of your loans and things that you owe pretty easily. So again, the assets minus the liabilities, that's your net worth.
So to kind of wrap things up on this topic today, why is it important, that you prepare financial statements or that you even understand what they are? Well, again, you have to have a starting point. If you don't know where you're starting from, how are you going to go anywhere? You wouldn't just get in your car and say, I want to go to California without having some kind of plan, some kind of a map to tell you how to get there. That's all this is. This is your map. It shows you, kind of where you're starting from. You need to start figuring out where you need to get to. Like in this case, they were starting from 263,000. They want to get to $1 million over time. Well, how are you going to get there? You have to start calculating this out if you're going to try to make a retirement plan for yourself, or at least even if you're not planning on retiring until you're 70 or something. You need to determine kind of what you have, what you're going to make, what you can spend, so you can develop kind of how you want to live your life. What kind of comforts are you going to be able to have? Is financial stress. So if you're sitting down and calculating things, and then you come up with, oh, we don't have enough. Now you can at least start determining, is there something I can cut? Is there something I can do on the side in the evenings, on the weekends, anything? Businesses, they do planning all the time. And that's why they do it. They have to figure out kind of where we're at, where do we need to go, how are we going to get there? If we're not going to be able to get there through revenue gains, we're going to have to do some cuts, or vice versa. Maybe we can grow our revenue and we're going to need to do some hiring in order to do that. So you have to kind of sit down and figure your household plan out. That's why this is important. Also, when you sit down with lenders want to know this stuff. You have, if you're going to sit down and try to get a loan, they're going to ask you all these same questions. What assets do you have? What liabilities do you have? It's the same thing. So you might as well be prepared. If you walk in prepared, they're going to feel much better about trying to give you a loan, and it'll help you manage your credit, which will then help you keep your interest payments down. It's all part of the same kind of game. You've got to know what you have, and you got to know where you're starting in order to try to figure out where you're going to go. Hopefully this is helpful, guys. I'll talk to you again later.